Tesla stock surges as quarterly vehicle deliveries beat Wall Street estimates. And this is a bit surprising since Tesla has been struggling over the last few quarters with their deliveries. So this report will come as a welcome surprise to investors. But I don't think it's all sunshine and roses, and I'll talk about why that is more at the end of the video. But first, the numbers. Tesla stock was set to extend gains after jumping more than 10% on Tuesday as the vehicle electronic giant reported quarterly vehicle deliveries that beat Wall Street expectations. Shares in the Elon Musk-led car maker rose over 3% in pre-market trading. The EV maker delivered 443,956 vehicles during the second quarter versus an analyst consensus estimate of 439,302 per Bloomberg data. In the second quarter, we produced approximately 411,000 vehicles and delivered approximately 444,000 vehicles, read a company statement. Broken down by car type, Tesla said it delivered 422,405 Model 3 and Ys and 21,551 other models. And the interesting part here is that the shares popped even though this report wasn't technically good. We can look here at this part that says the second quarter delivery figure is higher than the 386,810 vehicles globally that it delivered in the first quarter, but, and this is the important part, lower than the approximately 466,140 that it delivered a year ago. The shares basically are popping in anticipation that Tesla might be recovering to its former pre-2020 glory, even though it is still technically doing worse than last year. But this shouldn't come as a surprise to anyone because Tesla has basically always been a speculative investment. It was valued far more than other large vehicle makers like Honda, Toyota, GMC, Volkswagen, and so on, despite the fact that it delivered a fraction of the vehicles they did and made a fraction of the money. But the rally is a real thing with Tesla. Even though it's technically down overall in the last year, if we're looking just in the last few months, it's doing quite well, up approximately 63%. So we might be seeing a real Tesla recovery as it returns to the glory that it had just after the pandemic. Also, before we move on to more about this report, if you enjoy this kind of deep dive into business and finance news, I post 3 to 5 times a week, and then I'd love a subscription and to see you around here on some other videos. So the question becomes, after the poor delivery reports in the past, after Elon Musk's waning reputation, and after a stock that's not doing particularly well, why is Tesla suddenly having a comeback? And this is for a couple reasons. The first is that there are now EV tariffs on other electronic vehicle companies, specifically the ones from China. Some of the steep U.S. tariff increases on an array of Chinese imports, including electronic vehicles and their batteries, computer chips, and medical products, will take effect on August 1st, the U.S. Trade Representative's office said on Wednesday. President Joe Biden will keep tariffs put in place by his Republican predecessor, Donald Trump, while ratcheting up others, including quadrupling the import duties on Chinese EVs to over 100% and a doubling of semiconductors to over 50%. And even though these technically haven't been rolled out yet, they've been announced, which is probably slowing the production and importation of these EVs in anticipation of them not really selling well in the US because of how much they're going to have to cost. This automatically makes Tesla an easier and more convenient alternative and possibly cheaper now than many of the Chinese vehicles, so the US Tesla company is now looking a lot better. Now, for the second reason that this is happening is that Tesla has actually been cutting prices to try and compete with these cheaper Chinese EV makers. As you can see here, Tesla cuts US prices of Model Y, X, S by $2,000. Tesla cut the US prices of its Model Y, Model X, and Model S vehicles by $2,000 each on Friday, days after the first quarter deliveries of the world's most valuable automaker missed market expectations. Elon Musk's EV maker lowered the prices for its Y base model variant to $42,990, while the long-range and performative variants are now basically $48,000 and $52,000 respectively, according to its website. The basic version of its Model S now costs $73,000, and its Plaid variant costs $88,000. The Model X base variant now costs $78,000, and its Plaid variant costs $93,000. Tesla North America said on an X post that it would end its referral program benefits in all markets after April 30th. So Tesla is making active and real steps to try and get their EV market share and also their profitability back up to where it was, including pretty significant cuts. The cuts, I believe, were actually even bigger in China than they were here in the United States because of how much more competition there is in China. But as good as these numbers seem and this recent news and the stock price going up, I'm not sure it's going to be enough to keep Tesla as one of the top dogs in EVs, because as good as they did, other companies are kind of straight up doing better, as you can see here. Chinese EV companies Zeekr and NIO report record deliveries in June. And this is a bit, but I'm going to read all of it. Chinese electric company Zeekr said Monday it delivered a record number of vehicles in June, making its deliveries for the first half of the year the largest among US-listed Chinese companies only selling pure electronic cars. Geely, owned Zeekr, delivered 20,106 cars last month, bringing its year-to-date deliveries up to basically 88,000. That's slightly more than NIO's 87,000 deliveries for the first 6 months of 2024, although NIO continued to recover from its sluggish performance earlier in the year with a record 21,000 deliveries in June. Xpeng remained a laggard, delivering 52,000 vehicles in total in the first 6 months of the year, including 10,600 in June. When including hybrid vehicles, Li Auto remained by far the leader. It delivered 48,000 vehicles in June for a first half total of 189,000 vehicles. Most of the company's cars come with a fuel tank to extend the battery's driving range. This is who Tesla's competing with, and while Tesla is beating them all in terms of raw delivery numbers, they are all posting record deliveries and probably record profits, while Tesla is still struggling to catch up to where they were even just a year ago. Tesla is not beating any numbers, and all of these companies are catching up very, very quickly. And the double whammy here is that while Tesla is starting to fall behind relative to other EV makers around the world, they're also falling behind in their other major market that they were hoping to capitalize on, which is the robo-taxi market. If you look through Google search results of people talking about robo-taxi companies, aside from here, but this doesn't really mean anything, Waymo is the big one that comes up, and then a lot of these like list companies are talking about other ones like Baidu and General Motors and Cruise, and I think Google or Alphabet has some, but Tesla does not pop up here anywhere, and that's because Tesla simply does not have robo-taxi capabilities yet, despite this being one of the big things that Elon Musk said he was going to push for and pivot the company towards in the future years. So even though things look to have perked up in the last couple of months for Tesla, when you take into account the fact that the two major market industries that they're hoping to capitalize on, the EV market and the robo-taxi market, they are actively losing out to a lot of other companies, you have to wonder about the stability and potential future of the company. Now, obviously, all of that I just said is just speculation, and whatever happens, I promise to update you here. Thanks for watching.